Hello, this is Fxpela here. Welcome to this channel once again. Today we are going to learn a very interesting topic about fundamental analysis. So when we talk about fundamental analysis is what we call the news trading. That's analyzing the market with economic calendars. Do you get it? Very good. So you see, we have traders. We have two types of traders when it comes to fundamentals. That's those who trade after the news has been released, and also those who trade before the data will be released or before the news. There are people who trade before the news and there are people who trade after the news. So we are going to learn how to analyze the market before the news will be released and how to analyze markets after the news event has been released. You get it? So we are going to do before and after. But before that, let me tell you one thing about fundamental analysis. Fundamental analysis is news trading and economic events. You get it? And economic events come into two main categories. They come into two main categories. That's we have the qualitative. We have the qualitative. Do you get it? And also we have the quantitative. We have the qualitative and we have the quantitative. So when we talk about qualitative analysis, that's the quality. When we talk about qualitative analysis are analysis that does not come in the form of numerical data. Do you get it? They don't come in the form of numerical value, but they come in the form of speech. Do you get it? They come in the form of speeches. And when we talk about quantitative analysis, they come in the form of numerical analysis. They are the news that you see the actual, you see forecast. So today we are going to learn all these things. And also you see previous. Do you get it? You see actual, forecast, and previous. So when we talk about forecast, before that, let me first give you the site that you find news events. You know, before the news will be released in the market, some of the news are announced news, some of them are unannounced. So when we talk about the announced news are news that you can find them on the various trading platforms, like the Forex factory. Do you get it? It's a website for fundamental analysis. Do you get it? Forex factory, they tell you the time, the dates, like the impact of the news, whatever, everything that you have to know about the news, they will tell you. You get it? That's the Forex factory. And also we have the FS Street. The FS Street, one of my favorite websites. The FS Street, this is how it is spelled. Do you get it? The FS Street. Sorry, the T is not coming. So we have the FS Street. Hold on, I'm coming. We have the FS Street. Yeah, we have the FS Street. Yeah, one of my favorite platforms. And also we have investing.com. Do you get it? We have investing.com for all your fundamental events. The time that the news will be released, the impact of the news, what the news is about, you find them there. Do you get it? So with the quantitative data, when you go there, you see that you see actual, you see forecast, you see previous. So the previous is the previous data that was released, and the forecast is the expectations for the various economic institutions in the country. So let's say when there is a news event on United States dollar, that employment rates on United States dollar, the forecast that will come, that forecast is from the United States government, their government, those economic bodies or economic institutions in their government, they will come up with their expected value. So their expected value is what is called forecast. And the A stands for the actual. That's the actual value that will be released during the exact time. Do you get it? So when we are dealing with fundamental, we compare all these three things. Do you get it? But we will focus on the actual and the forecast. Do you get it? And also you focus on the previous two. Do you get it? It has a little impact. It will tell you how effective that trade will be. Do you get it? So we are going to talk about that one. So without wasting my time, let's switch to So welcome once again. So we are on Forex Factory right now, and we are going to learn the interface of the Forex Factory and also how to use it to analyze markets. So when you open Forex Factory, you see we have the various news over here. So Monday, these are the news, and also with the time. You get it with the time that if you don't want the time, if you want to set the time to your local time, you see the time over here, 7:22 p.m. So you press on that place to set your time to your local time. You get it? And also we have some bags or folders representing the news. You get it? And it represents how effective the news are. So we have red bags, orange bags, and yellow bags. The red bag stands for the highly impacted news. Do you get it? That's the highly volatile news, or the news that have more impact on the currency. That these news are represented by the red bags. And the one with the orange bags, they are news that are medium. It have average impact. Do you get it? And the yellow bags, it has weak or less impact. Do you get it? So me, what I normally do is that I filter all the red bags out. So to filter them out, you see filter sign over here. Press on that place. This place, untick the yellow, and also you untick the orange. You press on apply filter. So the filter has been applied, and I'm having only highly impacted news. Do you get it? I'm having only highly impacted news for this week. Do you get it? So to analyze this news, let's say we are dealing with, let's say on Thursday, we have United States dollar 12:30 p.m. PPI M/M. So you just press on that news. You see we have previous, we have forecast, and we have the actual. Do you get it? So the forecast, as I have explained, the forecast is more like the expected value for the various economists or institutions in the country. Do you get it? And also the previous data that was released, and the actual will be the actual data that will be released. So to know more about this news, you press on the yellow bag here. So I've pressed on that yellow bag, and the news, the source of the news is from Bureau of Labor Statistics. You get it? And the measure change in price of finished goods and services sold by producers. Usual effect, actual greater than forecast, is good for the currency. So if the actual value that will come is greater or higher than the forecast, it means it's positive for the United States dollar. Do you get it? It's positive for the United States dollar. That's the usual effect. So you read the usual effect to know, because there are some news that will come actual less than forecast is good for the currency. Do you get it? And also there are news that will come actual greater than forecast is good for the currency. So always check the usual effect to know the usual effects, the exact usual effect, whether you are expecting the actual to be greater or the actual to be less. Do you get it? So and also why traders care. That's the importance of this news. Why traders care a lot about this news. So it is the leading indicator of consumer inflation. When producers charge more for goods and services, the higher costs are usually passed on to the customer. So this is the reason why a lot of traders care about this news. Do you get it? So we are going to learn two main ways of trading the news. That's trading before or after. So first of all, let's see trading before the news. So to trade before the news, these are the values that you analyze. So I read a certain book, and the book told me that if we are able to analyze previous charts to predict market direction, that's when we get to technical analysis. When you are doing technical analysis, you analyze the previous chart. So when you're able to analyze previous charts, you scroll back, you draw your support and resistance, draw your demand and supply, read price action to predict future price movements. In the same way, you will be able to analyze these previous data that was released. You'll be able to analyze them to predict the next actual value, whether it will be greater than or it will be less than. So you see, you start from 2021. It is released once every month. You get it once every month, and you check that one here. The frequency, you check release monthly, about 13 days after the month ends. Do you get it? Very good. So it is released once a month, 13 days after the month ends. So you check the frequency to know the time that it will be released. Do you get it? And also, so let's say if you are starting analyzing the market from here, so this is how you're going to analyze it. So we have previous, we have forecast, and we have the actual value. Do you get it? So first of all, you analyze the actual value. Analyze the actual value first. So here, if it is positive, it will be green. If it is negative, it will be red. If it is neutral, it will be black. Do you get it? So it was let me get more dates. Very good, very good. So let's see the actual value. Let's see the trend. Do you get it? Positive, 2 positive, 3 negative, positive, neutral, positive. So you read the trend to come out with the trend, and you see that most of the time it is always positive. Starting from this point, starting from 2020 August, positive, positive, 1 negative, positive, positive, 1 negative, positive, negative, positive, negative, positive, positive. Do you get it? Yeah. So if you check the trend, you see that it is in an uptrend. Do you get it? Most of the time it is positive, so it is in an uptrend. So this trend will give you a clue that price is likely to be positive. Do you get it? Price is likely to be positive. That's the trend that is giving you. And also you analyze the forecast to see something. The current forecast that we are dealing with right now is 0.2. That's the current forecast. Very good. The current forecast is 0.2. So you check here whenever the forecast is 0.2 or whenever the forecast is 0.2, what is the actual? Do you get it? So here the forecast was 0.2, it was positive. Forecast was 0.2, it was negative. See, the forecast was 0.2, the actual came 0.6. The forecast was 0.2, the actual came 0.2, it was maintained. The forecast was 0.2, it was maintained. The forecast was 0.2, it came negative. The forecast was 0.2, it came negative. The forecast was 0.2, it came 0.3 positive, 0.2, 0.4 positive. Very good. So the forecast was, so this is how you analyze it. Okay, so we are scrolling through. Okay, so that's all. So analyzing this to get the forecast, the trend of the forecast, like you can see that most of the time, and also see something when you check through these values. These values don't normally go negative. Like apart from here, these two values here, and this point, most of the time it doesn't go negative. Do you get it? So you have gotten one clue. Most of the time it doesn't go negative. Starting from this point, there was no negative. Do you get it? Most of the time, like the percentage doesn't go negative value. Do you get it? So starting from here, there was no negative value here. You don't see any negative value here. Do you get it? And also most of the time when so again, you are going to analyze the forecast too. Do you get it? So after analyzing the forecast, you see that this is how you're going to pick the values to analyze the forecast. Anytime the forecast is 0.2, anytime the expected value is 0.2, most of the time they maintain it, or most of the time the actual increases. Do you get it? Most of the time they maintain it, or most of the time the actual increases. And as you can see here, see the actual values over here: 1.1, 0.8, 0.5, 1.4, 0.8, 1.0, 0.2, 0.8, 0.6. And you can see that the actual values, most of the actual value that comes over here, most of them are more than 0.2. Most of the actual values that comes here are more than 0.2. Do you get it? So the probability that when the forecast becomes 0.2 and the actual will be greater than the forecast is very high. Do you get it? The probability is very high. So these are the things that you consider to choose or to pick a direction before the data will be released. Because see something, check the actual values here: 1.1, 0.8, 0.5, 1.4, 0.8, 1.0. They are all greater than 0.2. here 0.2, 0.8, 0.6, 0.5, 0.7, 1.0, 1.0.8, 0.6. They are all greater than 0.2. Very good. 1.0, 0.5, 1.3, 0.3. They are all greater than 0.2. You get it? Here came 0.1, 0.3, 0.4, 0.3, 0.6. So you see, the actual values that comes normally, they are greater than 0.2. Do you get it? The actual value that comes normally are greater than 0.2. So if they are greater than 0.2 and this current news, they are forecasting or they are expecting 0.2 as an expected value of 0.2. They are expecting a value of 0.2%. And the actual that comes most of the time, they are greater than 0.2. So this is clear that the probability that the actual that will come is greater than, will be greater than this forecast is very high. Do you get it? The probability is very high and clear. You get it? The probability is very high and clear. And also, so this news is either they will maintain the 0.2 here, or it will be greater than the forecast. Like if the forecast was supposed to be 0.6 or 0.8, that one, it will be very difficult to get the direction. But with this one, the forecast is 0.2. And checking the previous data here, the values that comes as an actual value, most of them, they are greater than 0.2. Do you get it? Even checking from 2018 November, it was only this news. We are checking the one lesser than 0.2. So we have 1 here, 2, 3, 4, 5, 6. We have 7, 8, 8. We have 9. Sorry, we have 9. So only 9 news from only 9 news that came into the in the forex market on this particular news. Only 9 news. Only 9 news came, of which the actual was lesser than lesser than 0.2. Aside that, all the news from 2018 November, the actual was greater than 0.2, always greater or equal to 0.2. Most of them. Did you get it? Most of them greater than or equal. So if they forecast 0.2, the probability that the actual value that will come will be greater than 0.2 is clear and high. Do you get it? So with this type of news, knowing this, you have predicted direction, or you have be able to come up with some certain conclusion based on the previous data. So with this one, we're expecting it to be positive, right? So I'll go and sell Euro USD like 2 minutes before the news will be released. I'll go to Euro USD and sell. 2 minutes before the news will be released, I'll go to GBP USD, sell. Go to gold, sell, and target TP and SL. Do you get it? So when the spikes come, these news come in the form of spikes. So when the spikes come, I'll just take profit and go away. Do you get it? If it goes against you, fine. You see, Forex, even the technical analysis is not all time that price will move in your direction. Do you get it? There are times that you hit SL. Do you get it? Yes. There are times that you hit SL irrespective of your setup, irrespective of your strategies. Do you get it? So with this one, SLs may you may hit SL. You may get some of the directions wrong. Do you get it? But with this, most of the time, if you analyze it well like this, most of the time you will get the direction perfect before the data will be released. So with this news, it's clear that the news will be positive. Trust me. It's clear that the news will be positive. Okay, it's very clear that the news will be positive. So that's how to analyze the market before the news data is released. Do you get it? So now let's move on to how to analyze the market after, or how to trade news after the data has been released.